Hello my people, welcome to Elite Traders once again. Well, like I promised in the first video, I promised I was going to show you how to trade the spike, how to capture spikes without using RSI, and that's exactly what I'm going to teach you today. There are a few indicators I'm going to use. I know they are not new to you, you already use them, but then asking how you use it to capture the spike, that's where I'm gonna come in. Okay, so well, first let's bring the indicators to the let's bring the indicator windows. Well, first is MACD. You use the MACD, and you should check and be sure that the fast EMA is 13, and then the slow EMA is 48, and then the MACD SMA is 1. Okay, it's supposed to be on low. Apply to is low, and the colors you can make it however it fits you. Okay, so I've made mine blue, dark blue, and then red. Okay, so that's that. So here is our MACD. Now let's go to the next indicator, the moving average. Yeah, you're setting the moving average. So the first moving average we're going to use two moving averages. The first one is the period is 33, so the period to 33 I'll show this over 0, and then the method is exponential, and then apply to close, and this one you make the color blue. Okay, so the next moving average is going to be you set it to 23, you set the period to 23, period, exponential, and the color you can change it to red. Okay, yeah, so this is it. Basically this is it. Okay, so we're gonna set it on the crash. Okay, we're gonna set it on the crash 1002. Well, basically that's what we're gonna use for today's video. So okay, yeah, moving average 23 red. Yeah, okay, so moving average 33 blue. Okay, done. Okay my people, like I said, this is how we're going to use these two indicators to capture the spikes. Okay, so there's a video going around that whenever the MACD turn at a turning point, and then the two moving averages, when it's also cut across, it means you can enter and capture some few spikes. I mean, if you can capture a few candlesticks before it spikes, but it's not always the case. So this is how I use it. Okay, this is how I use it. Fine, if you want to use that approach, you can, but then the probability, and this market is full of possibilities and probabilities. Yeah, so if you use it, the possibility and the probability that you'll be hit by a spike is very high. So this is how I use it to profit. This is how I use it to profit. And so you can see, whenever I see that, I mean, not all the time though, but then when it's about to cross, mostly when it's about to cross, when you see that it's together and it's about to cross, you should expect a spike from there. whenever it's about to turn, you should expect a spike from there. So here, for example, you see you had a lot of spikes here, even though it had already after it even turned. After it even turned, you see here, I would have entered a trade here, captured this spike. You see, so there are a lot of times that whenever before it turns, immediately before it turns, or in the process of turning, you can capture a spike. And this is what I'm going to tell you to do. Okay. Okay, see here, when it was about to turn, when it was turning, you can see clearly that the red line was right on the line and about to turn. So you enter a trade, you make a buy here, waiting for a spike. So after a small while, a short while, you see you could have captured this long spike. It may not always be long, but I mean, you capture a spike. And then if you go into a trade for the first 1, 2, 3 and 4 candles, and yeah, in the end it has already turned but the spike hasn't come, you can exit the trade immediately. Unlike the RSI that you have to I mean, be waiting for the spike. You don't know when it might happen. That I mean, this one, if it doesn't happen immediately, you exit from the trade and then you manage their losses. See, so this is how we do it. There are plenty of times that it happens. Yeah, for example, when it was about to turn, say, so I would have entered a trade somewhere here, expecting a spike before it turns, and boom, it happens. See, not always, but here, for example, I wouldn't have entered because it has already it did not turn. If you, as you can see clearly, it did not turn. So if it doesn't turn, you don't enter a trade. But then if you see it on the line, right on the line, you can enter a trade. Here, see, it happened. So right on the line, you could have entered this trade and captured this spike. You could have captured it. So there are a lot of instances that it happens, you know. Yeah, okay, this is not a perfect setup, so you just don't go close to it at all. Here, okay, here too, it was almost on the line. So if you had enter, you could have just captured this spike. And then when you capture a spike too, and the spike, if you see that the spike is very long, very huge spike, and then if you have confirmed, listen very carefully, if you have confirmed with the higher time frame, mostly when you are trading the Pullman crash, you should confirm the higher time frame to see what is happening, if it's on an uptrend or it's on downtrend, or it's in a range. Mostly this work perfectly when the market is ranging. Okay, so if you check and it's in the range, I'm making a new video on the uptrend, how to trade the uptrend, how to trade the downtrend, and in a range. But then for the purpose of this video, I'm telling you that if you see that the market is in a range, it's a perfect time to trade this method. So like here, you could have entered and captured this spike, see, a lot of times. And this work mostly perfect in the boom 500 and the crash 500 markets. Okay, so the crash 500, so there are a lot of instances there, a lot of instances that you could have captured this. Even just here, as the market was about to turn, you could have captured this spike. See, yeah, okay, so see, a lot of instances that you can capture. a lot of instances. So in a day at least you can get about 20 to 30 setups, perfect setups. You don't need to worry yourself on the market so much. You don't need to worry the market. This market, this boom and crash market is not like the forex market. It's very risky to be on the market for too long. So when you get your daily target, you exit from the market. You don't wait long on this market. See, if you really want to succeed on this market, this was the perfect setup. So as it turned like this, you expect that it should spike. It should give you another spike before the market trades. So if you could have entered from here, and then you have captured these two spikes. See, and depending on your volume, it could give you a ton of money. See, but then what you lose if the spike doesn't happen is just peanuts. Okay, it's just peanuts. It happened here. So, and you can use just about two spikes to cover the losses of the few trades that the spike may not happen. And then if you say example, say you take about 30 trades in a day, just 30 trades, and then 5 of the trades the spike doesn't happen, because I know most often it does happen. 5 of the trades it doesn't happen. Just 2 of the trades that happen can be able to cover the spike lost. You see that the ones that you traded that it didn't happen. So basically that is that. So you should, but then don't forget to always make sure that you know the trend of the market. Don't forget to check out, to zoom out, and refer to the higher time frame, probably the 15 minutes time frame, to be sure. It has been ranging from here. So for a while now it's been ranging. See, drawing your support and resistance, it's been ranging from here, and it's ranged from here. So it worked perfectly here. You understand? It could work perfectly here because it's been ranging, and it's now ranging here in this previous resistance and support. Okay, so basically this is it. And there's another indicator that confirms, that gives you the perfect confirmation. That one you should watch out for my next video. And then make sure you subscribe to my channel, you share the videos to your friends or your trade mates. Make sure you share the video, you comment, and then you click the thumbs up button if you really enjoyed the video. There are good content like this that I'm going to publish for every now and then, so please make sure you subscribe. Please make sure you subscribe so that whenever I publish a new video like this, you can get it. Okay, so don't rely, I say again, don't rely solely on RSI to wait for spikes. That is not a good idea, and that is not a good method that will help you in the long run. Please don't do that. Please don't do that. Thank you. Okay, so I'll talk to you soon. May the market be with you. Wish you the best. Goodbye.